Give us a sense of what we're expecting from the OPEC meeting, because in large part, Saudi Arabia is going to have its way once again, it's assumed.
Yeah, I think so. I think OPEC this time is going to be different in the sense of that there is not much to do, and there is much action to be taken. During OPEC, in their last November historical meeting, OPEC decided that it will relinquish its role as a swing producer. And therefore, prices came down to $45 a barrel. Today, the prices are hovering around 60, 61, 62. So OPEC at the moment is happy, is satisfied.
They've got their market share and prices are starting to recover.
Absolutely. So they are not entirely happy, but they are at 60, 62, better than 45. And therefore, since the market took the lead, not OPEC, in organizing the supply, they don't mind it. So almost they are okay, they are nearly satisfied, but they want the $100, and that's going to be
Will they get the $100?
No, not really. I think the $100 maybe after 3-4 years, but not today.
Because shale oil producers in the US will, of course, be back in the game.
Absolutely.
As oil keeps creeping higher, won't they?
Absolutely.
Yeah.
And this is the concern. The question is, will this time ask non-OPEC to join them in cutting supply, or it is also, the question is, or a higher price is good for OPEC? Because every dollar increase in oil prices, that means an increase of production of shale oil, or encouraging shale oil to come back again.
But
it's a dilemma.
There are some countries that have been feeling the pain far more, particularly even at $60 levels. You've got Venezuela, you've got Nigeria. Talk to us through the countries who are really trying to push for a curtailing in production.
I think last November we saw a clear split between the majority of OPEC and the minority of OPEC. The majority are Venezuela, Iran, Iraq, that asking for $100 a barrel. While the GCC, the Arab countries, Saudi Arabia, Emirates, Kuwait, they really don't want, not really, they don't want the $100 at the moment, but they want to have a maximum share of the market. And with the arrival of shale oil, it's a threat to them. However, that's not to say that even we want the $70. Kuwait wants the $70 because it's no point of producing a cheap oil of, say, $4, $5, $6, $10 a barrel, while my budget, my annual budgetary number is in the region of $60 or $70. So what's the point of having a cheap oil, but then my fiscal budget is asking for $60.
Your country, Kuwait, of course, is part of OPEC. How is it affected by the current oil price?
Well, we will not have as much surplus dollars as we used to have, the 40, the $50 billion. But it's okay so far, and we can manage for the next 2 to 3 years at those levels. But after that, I think we have to do something.
Is it prompting diversification? Are we seeing these?
We've been talking about diversification since early 60s.
Never happens.
Never happened because you have the surpluses coming. So what's the point? As long as I have a surplus, we are not in actual hard need to do something.
So what's the tipping point?
70. The tipping in terms of the price?
Yeah, in terms of which would prompt diversification, which would mean that you wouldn't be getting budget surpluses.
No, which means then we have to really cut down on subsidies. And we have to increase the prices of oil, the domestic oil, the gasoline prices, the electricity prices. And then we have to feel the real crunch. No, something must be done in terms of cutting costs. And then, as we said, to cut down the magic number of $70, we have to really come down to $60 a barrel. But again, if we are forecasting that the $100 will be there in about 2 to 3 years, I don't think so we're going to do much.